Well, it was a strong end to the week for U.S. stocks. In fact, we saw the NASDAQ Composite close at its highest level in multiple months. We also saw the S&P 500 close above 2,800 and also give us a bullish crossover or a golden cross on the 1040 crossover method. We saw the Dow Jones up and over 26,000. So a lot of positive things going on in the stock market here today. In our trade application, I want to focus on a similar trade to what I did last night, but with a much less volatile security. And so we won't have to have quite as wide of a trail stop. And that security was plucked from the freshly created sector selector tool that I just got done posting here just a little bit ago. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's March 1st, 2019. First of all, if you're new, welcome aboard. Remember to go to our YouTube channel and click subscribe. And while you're over there, go into the description area and sign up for our email distribution list as well. That'll entitle you to all the stocks in the S&P 500 that are giving you overbought and oversold cluster signals in our daily email. In addition to that, we're heavy users of Twitter. Make sure you're following me at Brandon Van Zee, and be sure to click like and retweet if you get value out of these complimentary daily videos that David and I create for you. In addition to Twitter, we also have a presence on Facebook. Feel free to go to our group in the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up in front of us for those of you that are premium market scholars that want to follow along at home with your own charting package. Now notice the S&P 500 did close above 2,800 as I mentioned in the intro, so we closed at 2,803. We were up 0.69% today, a very strong day. We had some positive news out of China, and market participants responded in kind, sending the market mostly higher. We did see the Dow Jones close above 2,600, so another critical level that a lot of traders have been looking at. That was good for a gain of 0.43%. The NASDAQ Composite was up 0.83%, and then we had the Russell 2000 that actually led all four of these indices up 0.89%. Remember, when small caps are leading the way, that's generally a sign of health for the overall market and its willingness to take on risk. So pretty nice looking candle there out of the Russell 2000. To no one's surprise, we remain bullish, right? As I've been saying all week, our intermediate posture setting mechanism in terms of this green line on the market forecast indicator has suggested a bullish posture for basically the entire year. In fact, for the Russell 2000, that is the case. You can see that we went bullish right here on this candle on January 2nd, and we've remained bullish that entire time. You can see that easily because the background color of my chart is green that entire way through. So much of the same, and it might be a market that frustrates the bears, but nonetheless, the path of least resistance continues to be to the upside. Let's go ahead and take a look at our next chart setup. This will be chart 4C. And this is our 3 green arrows chart setup. Now, not a whole lot to report here compared to what I mentioned in the review yesterday. We still are kind of in no man's land from this particular chart setup perspective, where we have a mix of green and red arrows. We do have the red arrows in place on the MACD on all 4 of those charts, and so that's kind of the culprit there. Otherwise, we do have green arrows on all of the stochastics and all of the moving averages, and so we'll see who wins out, but right now we've got 2 green arrows and 1 red arrow on every single one of these charts. Let's go ahead and take a look at our next chart setup now, and this one will be a little bit more important. Remember, I typically do not do these Friday videos for you because David usually does, as I'm usually busy creating the sector selector immediately after the market closes on Friday. So he's the one that does this video while I'm putting together that tool. But because he's on vacation this week, he's asked me to cover for him here. So wanted to take the opportunity to spend a little bit of time just looking at the 1040 crossover method here, because remember, it's really Friday's analysis where it becomes the most important because that is the day when these get locked in stone, so to speak. Remember that when we're looking at this 1040 crossover method chart, we are looking at 3-year weekly candle charts. And so that's why Friday is so important. When we're looking at this Monday through Thursday, there's always the off chance that the market could make a big move at the end of the week, and it could basically eliminate whatever your setup could have been earlier in the week. Now that Friday has come and gone, these are officially in play as far as the golden crosses on the S&P 500 and on the NASDAQ composite. Now you can see that with the S&P 500, there's a little green sliver all the way off to the right-hand part of that chart. And you can see the same thing down here with the NASDAQ composite. You can see that there's been a wider green sliver to the right of the Dow Jones, because remember, the Dow Jones actually gave us a bullish crossover here a couple of weeks ago. So what that means officially here is that the only one that has yet to overtake the moving average crossover, in this case the 10-week overtaking the 40-week moving average. Remember, the 10-week is going to be the orange line, and the blue line is going to be the 40 period, or the 40-week in this case. And so the only one where that hasn't occurred yet is the Russell 2000. So if I right-click on the S&P 500 here and kind of zoom in, you can kind of see that a little bit better, where you can now see officially that orange line is up and above that blue line yet again. Remember, you can also verify that down below with the MACD 2 lines when this black line is up and over that pink horizontal line there. That basically suggests that these two crossover, or these two moving averages, are crossing over right at that moment. Now, keep in mind that when we're using something like this, it's typically viewed from a longer term perspective. That's why we set this one up using a 3-year weekly candle chart. Remember, the other charts that we looked at so far in this presentation were 3-month daily candle charts, so a much more tighter, compact time frame from more recent times. This is a longer period of time. This will go all the way back to 2016 here. So this is a long-term mindset, perhaps for some of you that have money that you cannot actively trade, maybe 401k money or something along those lines, where you're just trying to capture a major trend. Now, will this always work? Of course not. There is no technical setup that will always work, but the most recent 3-year time period has given us a good example of how it can play out under the right circumstances. You can see that the last time we had a bullish crossover on the S&P 500 was back over here in April of 2016. Notice in the kind of lower left-hand corner of this chart, the orange line went up and through that blue line. That background color went from pink to green, and that is similar to what we're experiencing right now. Now, you know, depending upon your mindset, it's not as though you have to expect this type of return for the next 3 years. I probably don't myself, just simply because we have had quite the extended bull run. But nonetheless, we never know, right? And right now, we do know that the trends are with the bulls right now. And it's not up to us to say when the stock market needs to stop going up. It's going to do so whenever it decides to. It's not up to us as individuals to kind of think it or will it to be the case that it should fall. Right now, markets are going higher. These trends are confirming that. So that is positive if you want to be bullish in the market, to see 3 out of these 4 charts now giving us bullish crossovers on the 1040 crossover method. Let's take a look at a few other charts now. Let's go over here to chart 4E, which is the Intermarket Analysis 12 grid. Remember, the background colors of these charts will be pink or green, and they will be determined upon whether the chart or the security on the chart is considered bullish posture or bearish posture according to the market forecast intermediate term line. Some big news here in terms of what's happened the last 3 days, and I've touched upon it all 3 of those days, so it's not like, you know, this is the first time I'm mentioning it, but I continue to mention it because it's important to the entire market. And that is what's going on with yields. This is now the 3rd straight up day for the U.S. Treasury yields, the 10-year in particular, and this one is pulled up using ticker symbol TNX if you're on the Thinkorswim platform. And you can see that this has been a very strong 3-day move. Remember, you don't typically see yields moving in exaggerated movements all that often. And so you do see some very significant price action right there. In fact, let me right click on that. Go over here to maximize sell. You can kind of see the significance of those 3 candles off to the right hand side here. Now obviously there are still other areas of resistance that we'll contend with from earlier during this 3-month period, but nonetheless, a week ago, this appeared like it was a downtrending security. I don't know if I would go on record saying that anymore. This is now looking more bullish. And remember, when yields get more bullish, typically what you find is that bonds are more bearish. And we can look at this chart directly below that, which is TLT, and that's an ETF that tracks the 10-year Treasury bond prices, not yields. And so when yields go up, like we saw a moment ago, bond prices go down. And look at these 3 candles on the long bond. Again, very significant. In fact, this is a little bit more of a significant move to the downside on bond prices than the significance of the yield move to the upside. And the reason I state that is because you can see that we breached a very significant level of support that was put in place back here in mid-January. So where we find ourselves right now with this candle off to the right works our way all the way back to basically December 17th. So that's pretty significant. That's 2.5 months right there that we've just given up. So keep your eye on that, because that can create outsized effects on other securities that are out there as well. Remember that when interest rates go up, something like Reits will tend to struggle. And we did see Reits go down here today. They were down a lot worse earlier in the day. I'm actually a little bit surprised they recovered this much. Some of the Reits were really getting smoked earlier today, but VNQ is one good way to pull up Reits in general. You can also use XLRE. Both of those will take a good look at those real estate securities, but nonetheless, we did have a down day in Reits, and I'd have to believe a big reason behind that is exactly what I mentioned before, which is yields did surge. Remember, the stock market in general had a wonderfully strong day, and so when you see specifically the real estate investment trusts within the stock market go down, then it's likely a result of what was going on with interest rates there. Other things to be aware of that are creating significant moves are the US dollar, which I mentioned that one yesterday as well. Let me kind of zoom in there. I was mentioning yesterday that I was impressed with the way that it was bouncing off of that moving average. I had no idea this was what was going to come out of the gate. This was a very strong candle that we saw here today. In fact, one of the strongest on the board, probably the biggest up candle that we saw there, going back to about this one on January 24th. So very solid bounce off of a moving average on the US dollar. So right now, despite that pink background, remember that background is pink because this green market forecast line is still going lower, but notice that the descent is starting to turn into more of a sideways movement. Notice that here there was a pretty strong degree of downward price action on the green line, and then more recently in the last couple of days it's gone more sideways. And so if we do get further upside action in UUP or the US dollar next week, I would expect this green line to turn around, and then this background color of the chart will turn back to green as well, kind of confirming it for us. But that, of course, sends reverberations across many different asset classes, including commodities. Well, take a look at what's going on here today in the commodity world, because it was fairly significant. I'll mention right off the bat that crude oil was down about 2.5% today. That's your chart all the way in the lower right-hand corner. That's a pretty ugly looking candle there, but we do remain above that rising moving average, so perhaps they'll figure a way to catch a little bit of support before it's all said and done. On the other hand, very disappointing price action out of gold. I was really kind of starting to get optimistic that gold wanted to go higher, but it's starting to show me otherwise here. In the last couple of weeks, gold has been breaking down. I brought it up yesterday saying, you know what, if we can find a little bit of support right on that moving average, I said that was kind of the make or break day, the do or die day, however you want to say that. Well, unfortunately, I decided it wanted to roll over and die because, as you can see, gold just got waxed here today. Let me blow this up to the maximum chart so you guys can see this. This is the candle from yesterday, sitting right atop that moving average, giving bulls a little bit of hope that perhaps we'll get a little bit of a bounce right there. Today proved that just wasn't in the cards. In fact, it wasn't just a small slice through that moving average like sometimes we'll have, and we're kind of left wondering, okay, is this going to bounce right back the next day? Well, the other thing that we have to be aware of is that this thing sliced right through some prominent support here as well. It didn't just slice through the moving average. It sliced through this horizontal support that was basically being set up from, let's call it February 7th through February 14th. And so that's significant as well. Now, for those of you that want to remain bullish on it, maybe there is one more reason to give yourself a little bit of hope, which is, the concept of old resistance becoming new support. Notice that when we were kind of getting to pushing towards the end of last year, so this gray line that you see right here is their crossover of the year from 2018 to 2019. So you'll recall that gold had a big run up into year end. And then it really started going sideways at the beginning of 2019. Made sense because gold was going up here at the end of the year when the stock market was getting punched in the face. So when the stock market started rallying significantly at the beginning of 2019, it made sense that gold probably wouldn't continue upward at that same trajectory. So what you saw take place is that gold just cooled off, but rather than going down, it just decided to kind of go sideways. And so from this candle on January 3rd all the way through about January 17th, that was a significant amount of time right there, you'll notice that much of the tops of those candles, a lot of those upper shadows or wicks, however you want to phrase that on those candles, was right up here at, around this same level that we find ourselves now. If you kind of, make your eyes kind of drift to the left where my crosshairs are here, you'll see that it kind of touches a lot of those previous candles over there. So that's our next line of defense for those of you that want to be bullish on gold. But, our patients should be wearing thin on this, at the current juncture, just considering we have significant deterioration of price action and chart right here in front of us. And the market forecast does suggest we have a bearish posture as that green line is now falling, and it's even falling towards 50. Remember, once it gets down below 50, we would consider that strongly bearish at that point. So anyway, disappointing action there out of gold. Let's go ahead and take a look at our next 12 grid, which will be the 12 grid that represents hang on, my mistake. We already covered the intermarket analysis. Let's try the foreign stock markets here. This is chart 4F for those of you that are premium market scholars following along at home. Here we have a little bit more deterioration than we did yesterday. We were really kind of struggling with Brazil, Russia yesterday, but notice that today South Africa kind of got lit up to the downside there with a pink chart. We also have Mexico. I addressed Mexico yesterday. Didn't necessarily address South Africa. South Africa, remember I mentioned this in previous presentations in months past, that South Africa is a very strong gold mining country. Now, obviously, every country is going to be much more diversified just beyond the miners themselves, but nonetheless, the gold miners are more important in South Africa than gold miners are here in the United States, as an example. So perhaps there's a little bit of that's going into it. Remember that the US dollar was up as well, so perhaps there's a little bit of that going into the chart as well. But the point is, look at this as a bearish trade now over here with EZA, South Africa. Notice that we had bearish clusters, or some of you will identify those as overbought clusters that took place on January 30th and 31st, and it immediately rejected that area, went down, like sometimes we will see with those bearish clusters, and when it decided to catch its support and go back higher, it did not breach those prices of those candles from the cluster days. And so it put in a lower high here, and now we've had 3 straight down days on South Africa. We're getting close to breaching this prior support. If that occurs, then we can make the claim that we actually have lower highs and lower lows. And so perhaps there are some bearish trade opportunities there for South Africa. I mentioned China earlier in tonight's presentation. Notice we did have a bounce out of China here today, so that's worth paying attention to because China's actually been in a pretty significant uptrend since the beginning of the year. We were up about 1.24% on FXI. That can represent large Chinese types of securities. And of course, we still have that bullish intermediate posture on China stocks. Let's go ahead and take a look now at our next chart setup. And this one will be our U.S. sectors 12 grid. And as you can see here, we've got a clean sweep across the board. Green, 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 meaning that we do have bullish intermediate postures on all 11 of our sectors in the United States, according to the market forecast indicator. And so that's a strong sign. Obviously, markets have been working their way higher, and so it makes sense that many of these trends look pretty strong. In some cases, perhaps too strong, right? We see here with utilities as an example, we actually did get an overbought cluster signal on utilities. However, note that the last time they got an overbought cluster signal right here, utilities basically went sideways for a week, but it didn't really go down. So, you can't always trust that that will always be the case. However, some of you might look at this as being a little bit more significant this time around because, let me right-click and maximize this. Notice that where we closed on utilities is basically right at the top of this candle and right at the top of this candle as well. So some of you might be thinking maybe there is a little bit of resistance at that double top area. On the other hand, some of you are going to look at that and say, gee whiz, doesn't that look like a cup and handle? And it does look like a cup and handle to me as well, but we haven't seen the breakout yet. So we'll see if the bulls want to take control of utilities next week, push them higher. If that's the case, then we might actually have a legitimate cup and handle breakout there. However, I will also remind you of what I mentioned a moment ago. We are starting to see Treasury yields break out to the upside, and while we did see negative price action out of real estate today, they did close in the red, utilities didn't necessarily get that negative sentiment. And typically, you will find that utilities and real estate securities will be negatively affected when interest rates go up. And so if that turns into a big theme here in the coming weeks, then I would have to believe that utilities and REITs would underperform on a relative basis. But that's if, right? We don't know if yields will continue to go up. We just know that they have for the last 3 days. Other areas of interest, the healthcare stocks had a nice little bounce back here today, up 1.42%, and actually looks like a good hold. Some of you have heard that term before, close above the high of the low day. So let me kind of maximize that sell as well to show you what I'm referring to. So we had this kind of 3-day pullback here. Remember, one of the sessions I did this week focused on some of the bearishness within the health insurers out there. So that was part of that 3-day pullback right there. But we did get a nice, really snapback rally here today in healthcare in general. Now, the health insurers are still really struggling on a weekly basis, but there are a lot of biotech stocks that have started to perk up here this week, and so they're trying to push the entire healthcare sector a little bit higher as well. So healthcare, really nice end to the week, up 1.42%. Actually, energy just barely nipped it out as the leader today. Energy was up 1.84% today. All right, since we're on the topic of these sectors, let me come on over to the internet now. And before I show you the sector selector, just a friendly reminder that if you get value out of these videos, remember it does take up about 2 to 2.5 hours of our time to produce the video, do our research, do our editing, rendering, processing, uploading, sending out of notifications. It's a big deal. We don't get paid to do this directly from you guys, and so one thing that we do ask of you, if you get value out of these, we ask one simple thing out of you. let us know through social media. Click like if you get value out of it, and we try to make it as easy as possible for you. Remember that we embed the Twitter link for the post for the Market Outlook video within the email we send you every night for those of you that are on our email distribution list. We also have the Twitter link embedded in the description area of the YouTube video, and we also make it nice and easy for you right here on our website. If you're watching this video on our blog, remember while you're watching it right here, it doesn't take a big effort out of you, I wouldn't think, to just come down here and click like by just clicking this little graphic right down here if you're on Twitter. Otherwise, if you're not on Twitter and you're on Facebook, we certainly appreciate that as well, giving us a thumbs up over there by clicking this. So again, if you get value out of these videos, we would certainly appreciate that. While we're over here, I wanted to talk about something that I just got done doing. I mentioned it before. Usually on Fridays, right when the stock market closes, I commit the next 2 hours to producing my sector selector for my students, particularly my students that are in my Monday top-down trend trading room, where we use the information from the sector selector to place trades and maintain and manage a portfolio of trend trades that are out there. And so typically that's what I'm doing on Friday afternoon. I did that again today as well. So that's why you're probably getting this Market Outlook video a little bit later than you typically would from me, because I had to do a lot of other things that I'm not typically doing. So again, that's why David does the videos on Friday, but since he is out of town, I'm helping you along this time along. So sorry for getting the video out a little bit later than I typically would, but hopefully most of you completely understand, since I have other things that I am normally doing during this time slot. But let's go ahead and have a little bit of a chat about what's going on with the sector selector, because normally, remember, when I show this to you guys, it's Tuesday, and it's a couple of days old. Well, this is produced as of just an hour ago here on Friday, so this is literally as fresh of data as you can possibly get. There are two different kind of levels of the sector selector. For those of you that are premium members of Market Scholars, remember you can access this every single week by coming up here and clicking on blog on our website, and then you can look at previous weeks by coming over here to categories and then choosing sector selector, and that way you can kind of compare this week's to last week's, etc., etc. But there are two different graphics. The top graphic is what I oftentimes share with you guys here in the Market Outlook video, and then the bottom graphic is what we use a little bit more so with a lot more details in my Monday top-down trend trading room for my premium students. So let's start with the top portion of the sector selector. And you can see that the top-ranked sector remains technology. That was the same thing that we saw the prior week. And remember, how I'm ranking this is on an equal weighted basis over 10 different technical indicators, everything from RSI to CCI to even using the market forecast indicator. So I'm measuring all of the components within each of these 11 sectors, and I'm basically then equal weighting them and then measuring them against one another. So it's a very comprehensive process. There are really 10 different measurements that go into every single one of the 1,000 stocks that make up these 11 sectors right here. So technology remains number one. Utilities remain number two, but we did have a change to report in number three. Notice that healthcare went from the number 4th slot last week up here to the number 3rd slot this week. So they kind of sneak into our top 3 there. And again, I have a feeling that a big reason for that was what we saw here today. Remember, I only update this sector selector once a week, so it basically captures all of the week's worth of data. But healthcare was the second best performing sector today. It was up a ton. It was up 1.4%. And so I have a feeling that's what really kind of boosted it into the 3rd slot, because I didn't really notice, healthcare outperformance earlier in the week so much. But today we really did see that, and so it did have an impact on the sector selector right here. Another big change that we saw was real estate. Notice that real estate was number 3 last week. That's the kind of the gray ball right here. And it fell from the number 3 slot last week to the number 5 slot this week. So we're starting to lose steam in the real estate investment trusts out there. And again, not a big surprise on that one because of what I've been reporting in these market outlook videos for the last 3 days, which is interest rates have really started to tick higher here very strongly in the last 3 days. And so when that happens, oftentimes the REITs are at a disadvantage. REITs typically outperform when interest rates are falling, then they start struggling on a relative basis when interest rates start rising. So keep your eye on that trend because that's really the lowest ranking for real estate going all the way back here to basically the second week of January. So that's some negative momentum there out of real estate. I also wanted to briefly point out that down here at the bottom of the list, we continue to have discretionary, staples, and energy kind of being our laggards on a relative basis. Now remember, keep that in context as well. This is a stock market that is treating most components very, very well. So when you see some of these laggards down here, remember that most of them are giving you positive price performance. It's just that on a relative basis, they're not keeping up with the technology stocks of the world. Let's now take a look at the bottom portion of the sector selector graphic. And remember, this is not something I typically share here in this free or complimentary YouTube video for the market outlook. This is something that I usually reserve exclusively for my Monday top-down trend trading class. And so for those of you that are premium members, you have access to this every week. For the rest of you, then here is a little bit of a sneak peek of what this looks like. And I mentioned before that I measure each of the sectors using 10 different kind of ranking systems. And you can kind of see those up here at the top, everything from 52-week high percentage to 3 green arrows and bullish market forecast, 1040 crossover method, 3-month price performance, 6-month price performance, Chaikin money flow, CCI, ROC, and RSI. So that's very comprehensive to look at all of those and compare them to one another. Now, this is an equal weighted process I go through, so it is not giving any sort of extra benefit to the Apples and the Microsofts of the world. Basically, I have 1,000 stocks in my Market Scholars 1,000 list, and they're all equally weighted here. And so that's why you'll see slight differences between this and what you might see when you're looking at things like XLK and XLU and those different ETFs, because remember, those ETFs are based on a market cap weighted system, not an equal weighted system like this is. Well, anyway, you can kind of see how this is structured. We got technology, utilities, healthcare in our top 3 areas right here. So that'll be the area that we focus on in my class on Monday. And then off to the right-hand side, you see the laggards from a sector perspective in the red. And then in the middle, you've got kind of those neutral sectors from this particular perspective. You can also see kind of in the middle, I've got a little bit of a bar graph going here that will give us a sense of market breadth. And the way we look at that market breadth is how many stocks are hitting new highs and how many stocks are hitting new lows. And you can see that on a week-over-week basis, it shows the date right here as March 1st, which is today. We had 154 stocks this week out of these 1,000 stocks that hit a new 52-week high, and only 10 that hit a 52-week low. Those 10 are down below here in kind of this pinkish area, and all of the highs are up above here in this greenish area. And then you can see all of the individual stocks that are hitting new highs. And then you can see my legend off to the right-hand side here as well to give you some more insight as far as stocks that are giving you 3 green arrows and whether they're fresh or stale, some strong industry, neutral industry, or weak industry data, and then also our GIVE stock ranking system, which is just an acronym that stands for growth, income, and value. And one of the things that I did notice when I was putting this together this week is technology just has a ton of stocks that are hitting new highs right now, as you can see right here. But one thing that did catch my eye is notice how almost all of them, in fact, there wasn't one single fresh set of 3 green arrows on here. We use the 5 and 5 rule in my Monday class where we're looking for stocks that have given us 3 green arrows within the last 5 candles and have not gone up more than 5% since then. And so this legend over here will show you the kind of this green dot will signify what we would consider kind of stale set of 3 green arrows. So while we have tons of stocks in the technology area that are giving us 3 green arrows right now, most of them are considered stale. There's a couple of them like ARRS and then RHT that are not giving us 3 green arrows at all. That's what those red X's stand for there. But those are subject to buyout offers, and so they're not true trenders at this point anyway. But I just found that a little bit fascinating, and it's a sign of the times, because remember, this is not a new bull market that we're in. We've been basically bullish on the market forecast since January 2nd. And so we're now 2 full months into the calendar year. And at that point, when you do start getting these stocks that are hitting highs, a lot of them have been in uptrends for quite a long time. We do have more fresh sets of 3 green arrows here within the utilities. That's why you're seeing more of those green check marks right there, et cetera, et cetera. One other thing that I wanted to point out while we were over here is our trade application example. Now, in my Monday class, we will typically focus on the top 3 sectors because it's specifically a top-down trend trading class. And so we're not only looking for trend trades, but we're also looking for top-down analysis to support our decision. This market outlook video is much more kind of wide-ranging. We don't have a specific goal or objective that would suggest we need to have top-down analysis helping us along. And so what I wanted to do here today was point out that in the second to worst sector out there currently, staples, there are actually 5 stocks that are hitting new highs. So it's not like staples are completely getting gutted or anything like that. It's just they're not keeping up with the technology stocks. One of those is Hershey's, and notice it does have a green check mark right next to it, so it's a little bit of a fresher signal here because it recently broke out of a nice sideways kind of price pattern. And so let me come on over here to the paper money account again, and we're going to focus on that using chart, let's just go to chart 4A on this one, which is the market forecast chart. But I just want to first point out that if we pull up ticker symbol HSY, notice the significant upward trajectory of these candles over the last 3 days. We emerged over these prior resistance areas from earlier in this 3-month period. In fact, if we go back and look at this kind of over the last, let's call it 6 months, you can see that that sideways pattern was really in place for really the last 6 months. We kind of topped out here at about 110, and we kind of bottomed out down here at, I don't know, let's call it 102, 103, somewhere in that vicinity. But generally speaking, this was a stock that was going absolutely nowhere for 6 months. Now, all of a sudden, it appears that we're getting some upside breakout type of behavior out of that stock. In fact, we closed near the high of the session on Hershey's. Now, one of the things I mentioned in the intro was I was going to do this trade application similar to what I covered last night, but it would be a little bit different in that the nature of the stock in question is a much less volatile security. You guys will recall that last night we looked at Twilio and had a very nice day, I might add. So we're already up 1.51%. So that's good. Hopefully it continues. We'll see if it will or not. But nonetheless, it continues its upward trajectory. But remember, last night we put in a 30%, or actually a 33% trail stop because we wanted to account for the very extreme price movement that we saw out of Twilio in the past. I measured that out over here, and I measured it out over here as an example. And so that was needed in that particular case. With Hershey's, it's not needed as much. As you can imagine, a technology company like Twilio is going to move all over the place, especially a newer IPO one like that. As opposed to a company like Hershey's that's been around for decades upon decades upon decades. And you can see here that when it goes down, let me show you from a drawn items perspective, that when it goes down, let's use this candle over here. Notice that we had a really kind of weird candle setup over here on October 24th and 25th. We had a high followed by a low over that previous multi-month period. But if we measure that from the high to the low, notice that it's 9.5% or 9.46%, thereabouts. Only a 10% move. That looks pretty extreme from right here to way down here, but that was still less than 10% right there. You'll also notice that if we measured from, let's say, right here on this candle down to the low of this candle, it was only about 7.3%. So another one that was, kind of less than 10%. Let's measure this one over here, looking at this high down to this low, and it's again only down 7.5%. So that's why it's helpful to measure these things, because to the naked eye, some of you might be thinking, boy, that looks like it really starts, plummeting when it goes down, but it's going down about a third as much as Twilio goes down on its typical down move. And so when you get into a security like Hershey's, it's possible you wouldn't need as wide of a trail stop to kind of protect yourself the way that you might with Twilio if you want to stay in these trends for the long term. And so what I'm going to do here in this case with Hershey's is similar to last night. It's just that we're only going to put on, let's call it a 15% trail stop as opposed to a 33% trail stop that we used last night. The 15% should protect us if Hershey's does go down. Let's say your typical 10% like we saw back here, we would still be able to survive that type of a pullback. So in order to place that trade, I'm going to come up here on the chart, right click, and go to Buy Custom with Stop. That's going to load up our trade down below. I'm going to click this little paperclip icon to lock those two in place. Now remember, you can change your quantity in your paper money to whatever you desire. I'm just going to leave the standard 100 default shares in here, but obviously you're going to want to position size according to your own account. Some of you have a $1,000 account and others of you have a $1 million account. So you can see how we wouldn't really be able to talk to you generally as an individual, so we have to preach to the masses here when we do things like that. So I typically just leave it with the default setting there, but you're of course welcome to change it to whatever is necessary for your own situation. Now, over here to the right, it gives us the choice on the buy to put it in as a limit order or a market order if we clicked on it and went to market. In this particular case, since we are going over the weekend where we've got a couple of extra days of possible news that might affect us, I am going to put that in there as a limit order. And I guess I'll just leave it where I just happened to click on it on the chart at 112.30. Now remember, this thing closed at 112.23 right here. So, basically it would give us about, 7 cents. In fact, that might be a little bit tight. Let me do this. I'm going to change that to 112. Let's give ourselves 20 cents of extra upside room. So let's call it 112.43 is what I'd be willing to pay for Hershey's on Monday morning, just in case the whole stock market is in, some sort of a jolly mood Monday morning. And remember, Monday, can be a bad morning just as easily as it can be a good morning. But the point is, we have a couple of extra days of news that could hit the news wires. So we'll be willing to put in an order here at 112.43 in this particular case. If it's above that, then so be it. There are plenty of fish in the sea and we'll miss the trade. But we'll put this in at 112.43 to buy. And then on that second line right there, and by the way, we could change this to good till cancel. If you left it in as day, because the market is over right now, the platform is set up to use your day as Monday. But nonetheless, we'll put this in as good till cancel just so there's not so much confusion for those of you that might be watching this. So we'll put that top line at good till cancel. The next line is stop. We'll put that in here as a trail stop. So I'm clicking on stop, going to trail stop. Off to the right where it says day, I'm going to click on that, and I'm going to go here to good till cancel there as well. Then on that final line, just like I did last night, I'm going to locate that darker red part that says plus minus right there, and I'm going to click that twice. 1, 2, turns it into a percentage, and I'm going to put in that number that I mentioned before, which is 15%. Now obviously, all of you, there's plenty of people that will disagree. Oh, you shouldn't put it at 10%. You shouldn't put it at 33%, right? There's always the complainers out there. So if you don't like the number, change it to whatever one you do like. In this particular case, I'm going to put it at 15 because I think it's going to be an acceptable wide net where we don't have to go too far, but we're going to have enough where we can kind of achieve a sense of confidence if the pullbacks in the future are typical for what this stock has experienced in the last let's call it 6 months or so. So we're going to put a 15% trail stop in there. Now notice I just put the number 15 in there. Notice that when I hit enter on my keyboard, then the system converts it to a minus 15% in there. So that's what I'm going to use in this particular case. Now, I'm going to go ahead and click on confirm and send. We'll review it one more time. We're spending about $11,000 in this case to buy 100 shares of Hershey's. And notice up here it says in the number 2 order description in the pink, it says sell 100 shares of Hershey's with a trail stop with a mark minus 15%. In other words, if the stock keeps going up, your trail stop will keep on trailing it higher by 15% below whatever the highest price that Hershey's achieves. And so that is what we will implement here for today's trade application example. Let me go ahead and send that in. All right, well, I want to thank you for joining me here tonight. Again, apologies for getting this out a little bit later than normal since I had prior commitments in terms of developing that sector selector tool. If you got value out of today's video, we encourage you to click like and retweet on Twitter to let us know that you want us to continue to do these going forward. I do have 2 trading rooms on Monday for my premium students, and David said, hey, if you don't want to do the market outlook video on Monday, it's not a big deal. Right now, my intention is to do the market outlook video, even though I have 2 premium classes, but I'll just have to see how I feel at that time. What could spur me along is if you guys click like on Twitter. That will let me know that you want me to produce the market outlook video on Monday. So with that, I want to wish you all the best of success with your trades and your investments. Have a wonderful weekend, and we'll see you all next week. Take care, everybody. Bye-bye.